Okay, so it's official. June 30th, 2021 is going to go down as the busiest day in real estate history in Canada. That's right, today is the day. There are more closings that will happen today than any other time in history. And I'm going to talk about why and then give you an update of pretty much everything that has happened this year so far, from the beginning of January all the way to now, to talk about how we got here and what you should be doing if you're thinking about getting into real estate in the remainder of 2021. But before we get into it, do me that favor, hit that subscribe button, hit that notification bell, please hit that like button so more people like you can see this video. And don't forget about our race to 25,000 subscribers, where we are going to give away $5,000 to one lucky subscriber to put into their RESP, their RSP, their TFSA, to pay down their mortgage, to maybe pay down some debt, or to simply do whatever they like with. But in order to win, you have to be subscribed. Thank you to the 14,450 of you who are already subscribed. To those of you who aren't already subscribed, go ahead, click that subscribe button. It's free, it's easy, it's definitely worth it, and you have to be subscribed to win. The definitive guide on how to manage your credit: product, penalty, price, in that order. It's never been more important to get your mortgage right. Okay, so let's get into it. Let's discuss why today is the biggest closing day in real estate history in Canada. I'm going to go through, show you the numbers, and we're going to talk about and basically do a review of what's happened and what's got us here in 2021. And of course, the thing that initially got us here was the pandemic and the change in buying preferences. Now, interestingly enough, I've done some reading. I've been reading The Economist and some other articles about the history of pandemics going back to the 1830s. And it seems like moving to the country, moving away from city centers isn't something that was new to this pandemic. It's something that happened during the Spanish flu and other pandemics previously. And basically what would happen would be wealthy people would take their stuff and they would leave the cities and they would go to their country residences to be as far away from people as possible. And I have to think, you know what? Yeah, preferences changed with respect to people wanting to live in bigger houses and people wanting to, work from home and so on and so forth. But really, if you look at human nature, it makes a ton of sense that the last year, people have basically moved away from higher density living areas in order to avoid what they perceive to be a threat to their health. And I mean, psychology doesn't change over time. It seems to be that that's what happened. And as a result, we saw higher prices in real estate pretty much across the board. In fact, record-setting prices in places like Vancouver and Toronto, and record numbers of sales in pretty much everywhere across the country. So I want to kind of dig in here to some of the data and show you what's happening now, where we are, and how we got here. Let's go through and talk about the big news stories of the year and do a little bit of a recap. I think you'll find this quite interesting. So first and foremost, national statistics. Let's talk about why this is the biggest closing date of the year. So if you take a look at this graph, this is monthly home sales going back to 2007. We don't need to go much further than that to see that April and March of 2021 were the two biggest closing months, or two biggest sales months in history. Now, there's a difference in real estate between the sales data and the closing data. So what happens is we typically have a spring market that leads into the end of June. So people in March, April, May start thinking about moving, and the large majority of people set up their closing dates for basically June 30th. The reason why is because, one, it is the end of the school year. Two is, if you set it for June 30th, you have July 1st off automatically, so that becomes your moving day. And in addition to that, traditionally in Quebec, moving day has always been July 1st. If you go and you take a look here, you can look up on Wikipedia, moving day in Quebec, and it talks about the reason why most people in Quebec still move on July 1st. Basically, the gist of it was, back in the day in Quebec, leases typically ran from July 1st to June 30th, which led pretty much everybody to do their moving on July 1st. And it is a tradition that is very much still intact today. A lot of people still want to move on July 1st. And quite interestingly, is if you want to book movers in Quebec, you have to book them 6 months in advance if you want to move on July 1st, which I find really, really interesting. But, what that has all led us to is it's led us to this scenario where we have had record numbers of sales, and we'll go back to our data here. And you see these huge numbers of sales, and all of those have been basically leading to end of June closings, which makes today, which has always been the very peak of the market as far as number of sales goes, it makes today the biggest day in closings in real estate history. Now, do we have exact data to back that up? No. But what I can tell you is unequivocally from Mortgage 360, we have a significant number of closings today, more closings than any other day of the year so far. And all of our lawyer friends who are acting on the closings are in the exact same boat, and that is both in Calgary and across the country. So congratulations, Canada. You've set a new record day for closings and money transferring from lenders to buyers and sellers to buyers and so on and so forth. So absolutely huge day. If you have a closing today, I hope that you had all your ducks in a row last week, because if you didn't, there's a good chance you probably aren't closing today. You're going to have to wait till Friday to get into your house, blah, blah, blah. But, huge closing day and huge day in Canadian history with respect to real estate. Now, I want to go through and talk about the year and what's led us here. Obviously, the pandemic, we've talked about that. And there's been a whole bunch of really huge news stories when it comes to real estate and finance and, everything that surrounds basically money. And it all starts back in March with this little story about this company that seemed like it didn't have a future, GameStop, which was traditionally a video game seller, and the short sellers that were shorting it because they also believed that it didn't have a future. And a few people on a little website called Reddit and a little board called, what was it? Real Estate Investments. I can't remember what the board's called, but whatever. Little board on Reddit that basically pumped this stock into oblivion and basically did what was called a short squeeze that ultimately caused a whole bunch of short sellers to have to sell their positions in order to cover their losses, which made it so that the that the people who invested in GameStop made a whole ton of money. So really interesting start to the year. And then moving kind of in through a couple of the other big stories, Bank of Canada was the first central bank in the world to say that they were going to slow down their quantitative easing, basically recognizing that we were on the verge of coming out of this pandemic. They have since made a couple other updates to this story, but pretty cool that Canada was the one to lead, at least from a financial and a central banking perspective, the world central banks out of what was otherwise deemed to be a pretty severe scenario. And then moving on from there, we got into the Canada housing market being the hottest it has ever been. So March, typically not the busiest month when it comes to real estate sales. Typically it's April or May. Actually, typically it is May. And all of those sales lead to that June 30th closing that we talked about. But March this year was the biggest month for real estate sales in Canadian history. It was huge. It set records in Toronto, Vancouver, pretty much across the board. And a lot of that had to do with people just getting tired of where they were living and wanting to jump aboard this real estate train that started driving back in September of last year and continues to go and go and go. Now, things have cooled off since March, but March was an abnormally big month for sales. And obviously, with major records getting set, we've seen increases to housing prices across the board. Toronto's real estate market set value records that they'd never seen before, exceeding 1.1 million. Absolute insanity when it came to the market there. Then we saw the federal budget get announced with several things being done in order to help cool the real estate market. But more importantly, most of the changes had to do with putting more money into the economy and basically creating more equality in the economy. Now, I did a story on this back in June, and we thought that back in April. And we thought that the federal government really missed the mark when it came to their budget and real estate. They didn't make any really big changes. And ultimately what we would end up seeing is that they would make changes later on. They just didn't include it as part of the budget, which was the stress test story. But before we get into that, one of the huge stories and huge benefits of the pandemic was that people stopped spending money. It turns out that walking around a city with a credit card in your pocket is one of the most slippery slopes to spending a lot of money. And when you lose that opportunity to go around and spend money at bars and retail stores and everything else, it turns out you acquire less debt. In fact, you start to pay off some of your debt. So this was a huge story back in April that Canadian credit scores were up. People were paying their bills, even though people thought that lowered incomes and not being able to work was going to have a catastrophic effect on debt and like. But in reality, what it did was it gave people less opportunity to spend, and showed us that when it comes to debt and it comes to money, it's more about habits than it is about strategies. And taking away that ability to have that habit of going out and spending really changed the financial outlook for a lot of people. It certainly did for my wife and myself. We had a complete shift in our finances once we weren't able to go out and spend on a regular basis. Now, that's not to say we were in a bad position before. However, we ended up in a very good position after the fact because we were spending less and our habits changed. Now, the biggest thing for people right now that I have to mention is if you take one lesson out of this pandemic from a financial standpoint, it is whatever habits were created by you not being able to go out and spend, the more you can prolong those habits and make those permanent, the better off you'll be financially in the long run. So then after that, we saw in March, this actually happens earlier in the year, we saw CMHC and Evan Siddall with a little bit of egg on his face have to go and walk back comments about the fact that the pandemic was going to be catastrophic to the Canadian economy. It obviously wasn't, especially from a real estate perspective. Central banks did a phenomenal job of creating a soft landing from the pandemic as well as the federal government. And at the end of the day, CMHC's predictions that housing prices should drop by 20% were obviously way off. In fact, they were off by 50% because housing prices in a lot of areas went up by as much as 30%. Now, what I loved about this was that Evan Siddall, who was very critical of realtors and very critical of housing, had to actually go and walk back his comments on Twitter saying, you know what, we don't have a crystal ball, we were wrong, and there's nothing more that I love than watching a guy like Evan Siddall, who led CMHC very well, but with a massive ego, and did so in such a way that offended a lot of my fellow industry members and a lot of Canadians as well. So, that was an interesting story there. Then we saw the Bank of Canada's Macklem come around and say, after basically saying they don't see any major flaws in the real estate market and any signs of stress in the real estate market, at the end of March, coming out and saying, you know what, we are actually seeing worrying signs. And this was a signal to the market that maybe people shouldn't be going out and buying as much real estate as they are. And I think that these comments had some effect because what you saw in April and May was you saw a dip in the market. March was high, April, May kind of seemed to balance things out. Obviously, I think we also exhausted the buyer pool, but it was interesting to watch all of a sudden the governor of the Bank of Canada acknowledge that maybe people shouldn't be investing as much in real estate as they were. Which then led us to the fact that while credit scores were increasing and personal credit and personal debt, so personal debt like credit cards and lines of credit were decreasing, mortgages were actually adding to Canadian consumer debt and actually pushed it above $2.1 trillion. So what this meant was that while people were having more money to pay off their unsecured debt, they also had more money to buy things like houses and secured debt, and therefore their debt ratios and their debt limits were getting even higher. Now, here's the thing, is most of these people were not having significantly higher payments because interest rates being so low led the actual cost to service those debts to also be low or similar to what it was previously when people were borrowing smaller amounts of money. So moving on from there, we saw the big news in the Canadian real estate market this year. Aside from obviously record-setting prices, we saw that the new stress test was going to be adopted as of June 1st. Now, this started with OSFI, the Office of the Superintendent of Financial Institutions. It's a mouthful, but it started with them looking at changing it, and they announced this in April. They then went through the typical process of getting industry feedback and consumer feedback, and obviously announced that on June 1st, people would now have to qualify at 5.25% rather than at the benchmark rate, which was typically the average of the 5 major banks posted 5-year fixed rate. So this was good news and bad news. It was bad news from the perspective of the qualifying rate went up. It was good news from the perspective of the fact that it detached the qualifying rate from the control of the banks. Now, obviously, after it was confirmed that this was going to happen, we saw what was largely expected, and that was the finance minister to take those exact same changes and apply them to insured mortgages, meaning that pretty much if you're qualifying for a mortgage across Canada right now, you are qualifying at either 5.25% or the contract rate plus 2%, whichever is higher. Now, the contract rate being the actual rate that you pay. So if you are getting a mortgage at 3.5%, you're qualifying at 5.5%. If you're getting a mortgage at 1.45%, you're qualifying at the 5.25% qualifying rate. And this was deemed as though it would have a significant impact on the market. We saw different people saying that it was going to encourage more people to buy prior to the deadline. We saw people suggesting that it was going to reduce housing prices by 5%, which was about what it would change the qualifying amounts for people for. At the end of the day, I don't think it made a huge impact. We'll see what it looks like in the June numbers. But ultimately, the stress test is just the federal government going ahead and making it just a little bit harder to qualify just in case interest rates do start to go up. Now, what's interesting is we have seen Benjamin Tal come out now and say that interest rate sensitivity is extremely high, and any increases to interest rates could have a devastating effect on the real estate and the housing market. So what I'm guessing that we're going to see is a very long-term prospects of having low interest rates, which, by the way, is what I've been predicting since the beginning of last year. That has not changed, and the data that we are seeing is consistent with that prediction. Now, moving to our final story here, and this is the big one. This was from yesterday. RBC Economics. They came out with a report, the RBC Housing Affordability Index. This is one of my favorite pieces of data. Love or hate RBC. I think this is one of the best measures of what's happening in the real estate market across Canada. They came out yesterday and said that housing affordability is at a rate not seen since 1990, with 52% of incomes on average going towards housing. That number is extremely high. What that tells us is that we're probably at the height of the market. We're seeing markets like Vancouver have 75% of incomes going towards housing. We're seeing markets like Toronto have 67%. Prairie's numbers are still quite low, 37, 38% in Calgary. But what we're seeing is that affordability is starting to bump up against the highest levels that it can get to, which means we've probably seen an end to the run-up in housing prices. That combined with a little bit less activity and people just basically generally taking the summer off when it comes to buying real estate, well, I can pretty much assure you that that huge run up that we've seen in the past is coming to an end. Now, I don't think we'll necessarily see a crash, but we'll probably see a pretty flat market for the next couple of years as we have basically, with low interest rates, borrowed the activity from the next couple of years with respect to real estate and moved it forward. People who are looking to buy or would probably have purchased in 2022, 2023 have probably made their move a lot sooner than expected. And basically, the low interest rates have basically allowed us, or maybe not allowed us, but caused us to borrow activity from the future, which means we're probably going to have a pretty flat market for the next couple of years, at least in those big markets like Vancouver and Toronto. Calgary, Saskatchewan, Manitoba, Edmonton, prairie markets probably have some bandwidth to increase in value still. Out east, they probably still have some bandwidth as well. But I think Ontario and Vancouver are probably at a level that you're going to see that's going to remain pretty flat for the next couple of years. So really interesting year, obviously, so far. What the future holds, nobody knows. Obviously, we've talked about the fact that as an economist, you could simply predict that housing prices will go up by 2 to 3% like they do every single year and outperform even the best economists in the country who predict things like big spikes or big declines. It is easier to go with the standard recommendations than it is to predict what's actually going to happen in the future because none of us has a crystal ball. But as of right now, it looks like things are stabling out. We're probably going to have some stable prices for the next couple of years. Probably going to have pretty stable interest rates for the next couple of years. Those people who believe that inflation is going to be a problem, go back, look at history, look at post-pandemic history and the spending and how quickly spending comes back online. It typically takes 1 to 2 years. So I'm thinking that inflation is probably not going to be as big of a problem as it was in the past. Although that being said, economics is all about surprises, so maybe it will. Now, if you are looking at getting into the market, and I think it's probably a good time to start thinking about that if it's been on your mind for the last few months, because we're going to start to see less bidding wars. We're going to start to see less craziness. We've got a couple of options for you with respect to information that you can get. We have 2 courses. They are Secrets to Getting the Lowest Interest Rate and the First Time Homebuyers Boot Camp. They are both priced extremely low so that anybody who is thinking about getting into the real estate market can take advantage of those, but they come with a significant amount of value, 10 to 50 times at least. In fact, we've put special offers in those courses to make sure that you get at least 10 times the money that you spent. But again, they're priced so incredibly affordably. I've put a discount code for Secrets to Getting the Lowest Interest Rate in the comment section below, as well as links to both courses. I sincerely hope you will join us. You can always, if you're getting a mortgage anywhere in Canada, engage Mortgage 360 by clicking on the Apply Now button down in that description link. And you know what? At the end of the day, whether you choose Mortgage 360 or you don't, my big why is to make sure this channel gives you the information you need to make informed decisions, informed long-term decisions, and to get the absolute best information in the mortgage industry. I sincerely thank, and keep in mind, I sincerely thank the 14,000 new subscribers that we've gotten this year. Yes, since January 1st, we have 14,000 new subscribers. To me, that is absolutely huge. I appreciate each and every one. Thank you for joining me on this journey. We'll continue to pump out videos 5 times a week. Appreciate each and every one of you. Do me that favor, hit that subscribe button, hit that notification bell, hit that like button. Don't forget about our race to 25,000 subscribers, and we'll see you on the next video. Cheers.